Let's take the discussion forward. Jonathan Schiessl is joining us now, the Deputy CIO at Westminster's Asset Management. Jonathan, afternoon. Thank you so much for your time. How do you see this shakeout of the broader markets, regulatory nudge, the SEBI, AMFI calling it frothy, the broader markets, and then of course the valuations which were kind of ahead or higher than the long-term averages? I think it's a welcome. Do you think it's a welcome correction which is playing out?
Yeah, I think as you mentioned, it's been, I guess, long coming. A lot of people have been suggesting the small mid caps have obviously performed extremely well, and as you mentioned, valuations are certainly no longer cheap. So I think a correction was certainly probably overdue in that space. And then obviously we've seen some of the larger cap indices, the Nifty, as you mentioned, being a new all-time high today. I guess that's also a reflection, a bit of switching out of the small mid caps into the large caps, but also I guess foreign money, index money continues to, I guess, push up a little bit into the larger cap stuff as well.
Point is taken, but let me bring Naresh as well as Kunal into the conversation. Kunal, you were putting it very aptly that the index might be at record high, gold, Bitcoin, etc. might be at record high, but portfolios are not. And that's all thanks to the kind of corrections that we are seeing in the broader markets.
Well, yes, and adding to the point which Ajay made that the advanced ratio is 1:5. In the morning it is 1:10. So if 1:5 was bad, then 1:10 was very bad. But then I think it's been a good recovery so far on an intraday basis. So yes, it was a classic vibrant shakeout for the markets as such. But the Bank Nifty particularly had been doing pretty well throughout the trading session. We are now just 500 points or maybe 600 points away from the Bank Nifty hitting a fresh life high for itself. And the more important part for the Bank Nifty when we look at the charts is that the gap which had been created on 16th of Jan for the Bank Nifty, when HDFC Bank had fallen by more than 10% on a single day, that gap has been filled today by the Bank Nifty. So I think that's a very strong indication that we are now looking at a strong possibility of the Bank Nifty making a new high and crossing above that 48,600 mark.
Okay, that's the take coming in on what the banks are overall doing. But Kunal, within banks, and I'm just going to pick up, the private banking pack here. While HDFC Bank yesterday as well moved 0.5%, today it's another 0.5%. ICICI Bank, Kotak, Axis, they are the ones which are charging up ahead. If you had to initiate a fresh long on a specific private banking names, the large caps, which one would it be?
So ICICI Bank is something which I've been bullish on. I think the stock is due for at least another 40 to 50 points on the upside. 1140 to 1150 on the spot levels is where I would expect the stock to at least get into a first level of resistance for itself. IndusInd Bank is also popping up on the chart in terms of a fresh breakout. So after almost 2 months of first a 300 or 400 point correction for IndusInd Bank, then the stock consolidating at the 1300, 1330 mark, and then now picking up pace again, coming back about that 1500 levels, indicates a two-stage of a classic correction and a sideways consolidation is over. So looks attractive over here. PSU banking lot, I think still look very attractive. Bank of Baroda, I think Canara Bank, etc. They are making fresh highs for themselves. So that's another pocket which looks attractive. I would probably want to concentrate more onto these few large cap names and few of these other PSU names.
Okay, actually, let me bring Naresh also into the conversation. Naresh, we're doing some interesting study on the difference between a shakeout, a correction, and a crash. Where are we with things when it comes to the broader market right now?
So if we look at the BSE small cap index, we made a top around 46,800 levels roughly, and we came down towards 43,400, 43,800 today. The previous lows are around 43,200 to 42,800. So you've just not even corrected 10% from the top. We are down 5-7% from the top. And moment we start breaking those levels, that is where the shakeout becomes a correction, and we could go towards a 12 to 15% drop. But as of now, we are still away from it. And there is a good possibility that we could get into a consolidation mode for the small caps, wherein we do not cross the recent highs very quickly, nor break the recent swing lows. So for now, it's a shakeout followed by a consolidation ideally. And we've seen there have been multiple shakeouts over the last 6 months, wherein we dropped 3-4% on the small cap index and recovered sharply over the next 2 sessions. But today, we've not seen a very strong recovery, even though the Bank Nifty, the Nifty has recovered back almost towards all-time highs for the Nifty. So this indicates we are possibly getting into a period where the small caps gets into a sideways mode, and we see action more on the large caps.
I was just looking at some of the losers list since mid-Feb when mid-cap, small-cap actually peaked out. The names which stand out are some of the PSUs. In fact, those including some PSUs which are putting out good numbers and good narrative for the next few quarters. Would you be interested in buying some of these beaten down Indian PSUs in this corrective phase? Jonathan? Jonathan, can you hear me? Okay, Jonathan cannot hear me. We'll just rectify that issue. But Nuresh, since this shakeout is happening, this PSU pocket is participating in this one. Which are 2-3 names which you would be keen if they fall off, say 20-30% from recent tops?
So ideally, you would not be looking at stocks which would fall 20-30%, and they would go, because after such a fall we tend to go sideways. But I would be looking out for names which have not really gone up massively. So in that, Container Corporation is one which has not gone up massively after that breakout of 800, 850 and has been consolidating well. So that is one stock. Even at current levels, SBI still may have much more legs compared to what has happened with the rest of the PSU banking names. So for now, my top pick out of the PSUs would be Container Corporation.
Can you hear me now? Jonathan?
Hi.
Yeah, so as you know that IFL is in the eye of the storm right now. You have worked closely with them, not that I'm asking this question solely because of this, but as a market observer, a good quality management may have erred on the side of processes and hence the rap on the knuckles from the regulator. But would you be a buyer of, if the stock continues to fall from here on? We have seen some clarifications from top management that remedial action is already underway.
Yeah, sorry about that earlier. Yes, it's obviously they've got a good franchise. When you have a business which has a good franchise and generally an interesting product or service, and an issue like this arises, I think an investor does have to be careful because these problems can carry on for a little while. Generally speaking, when we have in the past owned a business where there has been some sort of regulatory issue, there's two ways you can react to it. You can immediately sell and reappraise after you've got some more information, or you can just try and sort of live with it and just work through the volatility. The Indian market, where we haven't had that experience for investments within the Indian market, but we've had experiences like that outside of India, where generally we're a bit quicker to exit the position. Until the uncertainty is resolved, these things can carry on for some time. Seeing how management react to the regulatory news is extremely important, I think, for investors. And yeah, it's one where generally we place a lot of work on governance and how companies operate from that perspective. And if there are any doubts around that, it does make us very concerned, and we would generally look to see some reassurance from management on these factors. Of course, quite often it turns out that the issues or perceived issues are dealt with very rapidly, and then things carry on back to normal. But obviously, just in summary, I think it does. There is some caution that comes from these sort of events, but they need a bit more time to assess what the overall impact.
Makes sense. In fact, we're going to take a very quick break on that one. And since we're on the subject, IFL Finance is going to comply with RBI concerns by the 31st of March. That's the word on record coming in from the chairman, A.K. Purwar himself. Let's hear out a slice of his exclusive chat with us.
The damage will definitely be there because almost 30% of our businesses now we are stopping not doing. So damage will be there, but I expect this damage to be temporary. I expect that, we are making efforts to come back on rails as fast and as quickly as possible. I expect that maybe 2 months, maybe 3 months, we are able to convince RBI. If they are comfortable with whatever remedial action we have taken, and they carry out a special audit as early and as quickly as possible, then we should be come back on rails very fast.
Right.
But our IT advantage would ensure that the high growth trajectory which our company has followed so far would not be allowed to go away. If we come back on rails quickly, there would be any negative fall by March 25. We will continue to maintain the present market share, hopefully.
Okay, that's interesting.
Well, while the index is scaling at an all-time peak, the Nifty as well as the sensex soaring high, pushed higher by the private banking names. That's not quite the fate with the mid and the small cap index. But the one space which continues extremely buoyant is the entire primary market, and Tata Sons is looking at listing on the exchanges over the next 1.5 years. My colleague Samit is here with all the details on what exactly is the process going to be, what companies come under Tata Sons, and how big the IPO is going to be.
Well, if you see the Tata Sons IPO, that is expected to start in the next 1.5 years. But despite that fact, a lot of Tata Group companies have been buzzing in trade, especially Tata Chemicals. If you see, it has been gaining for the last 2 consecutive sessions. And the reason behind this, one of the reasons at least could be the Tata Sons IPO. Now, how can the Tata Sons IPO actually benefit Tata Chemical? For that, first, let's look at the Tata Sons shareholding pattern. Now, in that, if you see, the Dorabji Tata Trust, Ratan Tata Trust, and other promoter trusts own close to 66% stake. Apart from that, there is Sterling Investment and Cyrus Investment, which own close to around 18% stake. Then there are 4 listed Tata Group companies, that is Tata Motors, Tata Chemicals, Tata Power, and Indian Hotels, which also own stake in Tata Sons. Now, Tata Motors and Tata Chemical own around 3% stake, Tata Power owns around 2% stake, and Indian Hotels owns around 1% stake. Now, the market value of the listed entities of Tata Sons is close to around 16 lakh crore. Apart from that, if you see, the street is valuing around 1 to 1.5 lakh crore for its unlisted investments and step-down subsidiaries. So if you see, the total valuation of Tata Sons could be around 17 to 17.5 lakh crore. Now, given the fact that Tata Sons is a holding company, there will be a holding company discount that will be applicable. Now, if the holding company discount stands at around 30%, then the actual value of Tata Sons on listing could be around 12.6 lakh crore rupees. And if the holding company discount is at around 60%, then the value of Tata Sons on listing could be around 7.8 lakh crore rupees. Now, even if we assume a 60% holding company discount, which means that Tata Sons value would be around 7.8 lakh crore rupees. Now, this means that the 3% stake that Tata Chemical owns in Tata Sons is valued at close to 20,000 crore rupees, which is nearly 80% of its current market capitalization of close to 25,000 crore rupees. In case of Tata Power, if you see, nearly 21% of its market cap is equal to its stake value in Tata Sons, and in Tata Motors, it's around 16%, and in case of Indian Hotels, it's around 19%. Now, do remember, this is assuming a 60% holding company discount. If the holding company discount is on the lower side, then the value of the stake could well be higher for these 4 listed Tata Group companies, and this could be one of the reasons why Tata Chemical has been buzzing in trade for the last couple of days.
One of the reasons, though, because we understand that the Tata Chemical management right now is in US doing a roadshow, and ever since they actually declared or discussed their EV chemical or renewable side plans, market has got mighty interested in that one. But there are other chemical related stocks which are in EV, like Gujarat Fluoro, have been spoken about it. Anything in the specialty chemical space, Jonathan, which you like? Do you think the time has come for high margin performance chemical names to start doing well?
Yeah, I think India offers some very interesting specialty chemical companies, listed companies. Currently, we don't have any play in that sort of area. Previously, I have owned some exposure a few years back. But yeah, currently we don't. Obviously, there is an element of cyclicality around that space, which we tend to avoid in our new process. But as I said, there are some very good names there. But yeah, we haven't got anything specific. Obviously, the whole EV story, in some sectors, some sections of that story is quite pressured at the moment, with some of the raw material prices coming off, and clearly a bit of overcapacity coming in place, certainly within mainland China as well. So it's a very good growth story, I think, the EV side for the specialty chemicals, but it's also one that's under a little bit of pressure in certain sections at the moment.
All right, Jonathan, we'll let you go on that one. Thanks so much for joining us. In fact, since we are talking about stocks, NBCC, that's one infrastructure stock which should be in focus. My colleague will also join us very shortly. We broke the story earlier in the day that there could be a big project which could be coming to NBCC as far as other state governments are concerned and many of the PSUs who are sitting on a massive land bank is concerned. Prakash is here with us with more on that. Prakash, tell us.
Yes, we are learning from our sources that the NBCC has prepared a mega plan to monetize land assets of various PSUs. We are given to understand that the company is under active discussion with various PSUs to monetize their land assets. That includes companies like ITA, Prasar Bharati, MTNL, BSNL, BHEL, ITA, among others. So we are given to understand that the NBCC to monetize land assets of around 3,000 acres of Prasar Bharati, around 10,000 acres of BSNL, 380 acres of ITA, among others. And MOUs with some of the PSUs will be signed within the next 2 months. Sources are informing that around 1 lakh acres of land assets that is associated with PSUs will be developed by NBCC going forward, and company is under active discussion with various public sector undertakings. Along with that, these land assets will be developed under various segments, like for commercial purpose, for some of the land parcels will be developed for housing requirements. Along with that, NBCC will redevelop some of the land parcels for the company's own use. Sources are also saying that the company is also under active discussion with the various state governments for the construction of mega warehousing complexes in order to provide better pricing freedom to the farmers.
Thanks, Prakash, for that. In the meantime, of course, the Nifty is sitting at fresh record high levels. Ditto can be said for sensex as well. We are comfortably above the 22,450 mark. Time now to slip into a very short break. When we come back, we'll track the last 30 minutes of the trading session. And then, of course, the big interview lined up for you at 3:30 p.m. You don't want to miss this one. It's, of course, the biggest interview in town. And that's the RBI Governor exclusively speaking with ET Now's Editor-in-Chief, Nikunj Dalmia. So just watch out for that 3:30 interview as well. But time now to slip into a very short break.